Ladies and gentlemen, K Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Market is down, pretty much flat. You can see 0.15% today on the S&P. I think NASDAQ and the Dow, they're similar, but we did see the Russell, the small caps, and the banks, XLF, they are down. I think Russell 2000 is down about 2.5%, and the banks, they're down 1.5%. And remember, they were up quite a bit in the last few days, so they got hit a little bit harder today. But S&P looks like we're kind of near where we were yesterday, pretty much. And so let's get into it. Let's try to figure out what we could potentially see happening tomorrow. Tomorrow's Friday, right? So tomorrow will be the last day of trading for the month of May. And so I've been actually tweeting things out on my Twitter account at 2KKim on some of the monthly charts and things like that. You can go ahead and check that out. Also, I've actually been getting reports from my followers on YouTube that sometimes or many times that they're not getting the notifications or the notification when I put out new video. That sometimes they're getting notification for the video that was a couple days old. And so if you want to make sure you get these videos on a daily basis, because I put out video every day, Monday through Friday. First way is you can go and follow me at 2KKim on Twitter, because I always do post there when I tweet it out when I do create new video on a daily basis, usually right after the market close. And sometimes even with the Twitter, if you're following a lot of different people, you might not able to see my tweet. So you really want to make sure you get my video. You really want to make sure you really have to see it on a daily basis. You do not want to miss it, and you want to guarantee that you're going to get it. I'll tell you how to do it just real quick. So if you go to 2tradersclub.com, right? So if you do numeric 2 tradersclub.com, right? If you go to 2tradersclub.com, you will land in this page, and then you can go to analysis here, right? And then it's gonna look obvious. This is a desktop view. If you're looking at through your cell phone, it'll be different. But if you're looking at through your tablet or laptop, it will look something like this. If you zoom in or not zoom, but if you scroll down, you see right here, right there, right? So you can put your email address, and as soon as when I post a video or article, it will send you an alert to your inbox, your email inbox, right when that happens. So you'll never miss a video or any kind of article that I might put out. So that will be the best way. You'll never get a promotional or spamming emails from me or from the Traders Club. I guarantee it. I never send out promotional email. I never send out marketing email. I never send out any other emails. So when you put out your email here, it would strictly be, you would only get an email from me or from the Traders Club website only when I post a new article or new video. That's it. There will be any other email, and I do not sell your email addresses to somebody else or share them with anybody else. Just so you know, because I know nowadays, these spammy emails, promotional emails, marketing emails, it's just crazy. It's so stupid. I hate them. So ever since I opened up my blog years ago, I've never sent out marketing promotional video or email ever, right? This is the reason why I don't heckle you guys, telling you guys, you know, on a video, oh, please, you know, subscribe and like this and do this. I'm not telling you to do anything. Do whatever the hell you want, right? I'm not telling you to do anything. I'm not heckling you guys to sign up to my service. Nothing. Because I think if you're ready, if you want to subscribe to my channel, you will do it. I don't have to tell you to do it. If you want to write comments, do it. Because I do read all my comments, right? And if you want to like this video, go ahead and do it. But I don't have to tell you every single video for you to do something. You know what I mean? That in itself is kind of a spammy, right? I mean, all the YouTubes you watch every single day, man. If you haven't subscribed, subscribe. If you like this video, man, hit that thumbs up, man. That I'm not gonna do that because I feel like, you know, I feel like that's just they're doing it. The reason why they do that is because the more thumbs up you get, the more comments you write, it's just algorithm thing. It's like YouTube is gonna put them on a search query or like, you know, they're gonna put them higher. So it'll be more visible. They'll get more views. So if they get more subscribers, if they get more likes, if they get more comments, they will get more views. And that's why they're asking you to do something. I'm not asking you to do anything. I never do. If you've been watching my videos, I never ask you to do anything, right? So anyway, so just a quick little announcement, I guess. But let's get into it here. So market pull back, so you can see, let's kind of get in, let's see what happened today. So today, this is first hour. So this first hour, second, third, fourth, fifth, sixth, right? So that's today's market action here. And so this, so you can see, I actually, you know, tweeted it out at 2K Kim on Twitter, and this was 1 o'clock, which is Central Time, which is, you know, Central Time, 3 o'clock market closes. So it was 2 hours before the market closed. So it was right about here. It was right about here when the S&P Spider was trading at 306.56. So that's when we got into the overbought level. And it's not a coincidence that we're seeing a pullback there. And it didn't have to pull back like that, though. I mean, it didn't have to come down like that. It could just slow down in that vicinity or grind a little higher, but pretty much like consolidating. It could have either consolidated or it could have either pulled back a little bit and gotten back up. It could have done something like this. But basically what this oscillator was saying, it's at this point, bulls, you know, made that run. In the short term of things, bulls are tired. That's what he was saying. And obviously we did saw a pretty decent run since the May 27, 296 to about 306 move. That's a nice bullish run in the short term. And then finally the market got into a bullish, or the market got into a little bit of pullback there. Yeah, it's a little bit loud, I think. I don't know if you can hear in the background, but they're mowing lawns and stuff, and I can hear it. Let me see if I can. Yeah, my windows are closed, but it's still pretty loud. But anyway, so we're back here, and I gave you guys this level here, 3212, right? That was the prior resistance, new support there. And so we saw a little bit of dip buying activities occurred in the last 10-20 minutes or so. And looking at this short-term moving average, looks like, you know, let's zoom out a little bit, because we have to give some credit to this short-term moving average, because this has been getting respected. So ever since we got up here, this was what, May 14th. Ever since, see that moving average there? Ever since here, it's been acting as pretty strong support. So what bears need to do, obviously, we gotta, you know, you wanna break this trend. You gotta break this, you know, moving average to kind of kill this short-term momentum, right? In the short term of things, we know that we got higher lows, right? We got higher highs. So trend is up. And bears are looking for this trend to be dismantled, at least in the micro term. And first thing is first, and that 30212 level must be broken for that to happen, prior resistance. And then we got that short-term moving average just hovering around it, just underneath that, guarding that level. So need to break below it. Probably best way is gapping it down, because that is a support currently. And if bears don't, it will be best to not to deal with this level, because every time when bears trying to deal with this level, it's been very, very hectic for the bears to, bring it down. So maybe trying to kind of kill that curse, gap it down, and come down to challenge this gap at 298-ish. We got this small gap here still open. Challenge this gap. And that level, when we pull back, is actually the prior resistance level here. You can see that's that swing high, right? Initially, this thing gapped down. And then in the first 2 hours of trading back in, back in what? March 5th. This was last time when we were at 305 was March 5th. And that swing high was the resistance there. So you can see there, which was coinciding that we're getting to overbought level and we seeing a pullback. Let's zoom out a little bit, kind of look at the longer term picture here before we get into the oscillator. And you can see, and I've drew that line yesterday on the daily update video, and that's going to be the rising pivot that we're going to track pretty much the next couple weeks, as long as we stay above it, because it's important pivot. So we're going to talk about this pivot on almost every video. Obviously, bears want to break this below it and not make this pivot to be any stronger, because currently this pivot, we're holding above this pivot. This pivot has been acting as pretty resilient resistance, right? You can see bears been trying to get above it, and it had kind of a tough time until when that happened, right? Until when that happened just this week. That's why it was a crucial move from the buyers to break above that rising pivot. And so obviously that rising pivot, we may get retested again, which is at 298. If bears bring it down tomorrow, that 298 will be tested. That's the gap area. That's the prior ridge. Because we got a lot of levels coinciding in that vicinity, right? Let me zoom in here a little bit. You can see, so if bears do bring it down tomorrow, then what's going to happen is it's going to be met with that 298 support. That's a prior resistance, new support. And then the gap area is also going to provide support. And then we got that rising pivot, that longer term rising pivot, also guarding that level. So that 298 level is going to be important level for the buyers to protect. It's going to be important level for the bears to break, right? So I think that's the analysis. And those are the things either bulls or bears want to look for tomorrow. And obviously, buyers want to see this level holding tomorrow, and we cannot rule this out where, we saw end of the day down move, and then next day we just gapping it up. Like it happened here. We've been seeing that happening. So I think bears are maybe a little bit worried about that, because we've been kind of seeing that happening a lot, where like it's droopy towards the the last hour of trading, and then it seems like next day buyers bring it back up. So to kill that momentum, it will be best to maybe seeing a gap down, and then breaking below to just jumpstart this thing, and breaking below 302, and then come down and retest that 298 level. And see what happens here. It'll be best if the bears can maybe come and fill this gap. That will be at 296 here. I'll put that level also. Will be 295, 296. So 302, 298 will be the level to watch tomorrow. Let's look at the oscillator here real quick before I let you guys go. And we talked about a couple things here. First of all, we talked about this higher low on the oscillator. That higher low on the oscillator is actually important. And I'm not going to cover this today. We already spent too long here. But what I'm going to want to cover is overbought. We're at the overbought. So here, we're back here. Let's do this again. We're back here again. Zoom out here a little bit. So we're back here again. right? So this one overbought, 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 and overbought, right? So if you just look at this on your screen, you can see that it was a short-term bearish, and I think, but in the micro term, it seems like there might be a short-term down move, but there was up move and then gap down. There's an up move and then it grinded higher. There was an up move next day and then pull back. This one straight down, pull back. This one down a little bit, got back up, down a little bit, and then got back up again. So it doesn't really tell us a whole lot at this point. We are at overbought. So today, only piece of information we have is bulls are tired in the short term, and bears took advantage of that by bringing it down in the last couple hours of trading today. Other than that, we don't have much information to go by. So tomorrow will be important to see how this oscillator progress and where it's at, and then maybe we can get a little bit better picture of where the market might be headed going into next week. So let's come back tomorrow. Let's re-examine this market, and tomorrow is the weekend, so I'll be doing the market update video, and I'll be doing more extensive analysis. I'll look at a couple indices, couple of my current holdings, and then we'll look at the Bitcoin and gold and silver and things like this. So tomorrow we'll do that, but obviously before I start that, I will follow with you guys on the 65-minute chart analysis and look at this oscillator and see where we're at. So we'll go from there, right? So you guys have a wonderful evening and good luck trading tomorrow.